For you to be successful in trading, knowing when to trade and when not to trade is one of the most important skills you should develop. Welcome to this week's edition of NTFX Weekly Outlook. We have had a lot of moves these past weeks. Some were correct and some were slightly wrong. For example, DXY were a bit wrong because NFP came and pushed DXY to the upside, because at this level we expected DXY to fall. That was our expectation. But of course, we are human, we cannot be right every time. That is why the game is a game of probability. Okay, when you are anticipating a sell opportunity from this level, then you have to be careful about how you size your position so that you don't over leverage. Okay, NFP came and the news was good for dollar. The job report was very good for dollar, and then you have a bullish move for DXY. All right, so last week we were wrong on DXY, so we have a bullish move. But of course, you all understand why there is change in structure, because job report was good. And again, you should also know that fundamental take precedence, or what do I call it? It takes dominance over technical. All right, when you bring technical and you bring fundamental, fundamental can change the course of your technical. So it does not mean that you are wrong. It is just because the fundamental that controls the market has changed the course of the technical. Is that okay now? So right now, what do we expect on DXY for this week? Now we have had a break of structure to the upside. We just need to see a corrective structure right here and one more push up. Okay, must have this corrective structure, one more push up. It can't just fall at the current level. No, it must correct and break to the upside. When it breaks to the upside, I don't want it to go above this level. All right, so if it goes above this level, then we have to rethink the bearish structure on DXY. But for now, let this level be protected level, but let there be corrective structure here, a break to the upside. That is DXY, guys. Euro dollar. Okay, euro dollar was a fantastic setup that we caught on euro dollar, because at this point in time, right here, we see here as corrective structure. From this level, we wanted a move to the downside, and we have impulse, pullback, impulse, pullback. We recognize this as a running flat for this drop to the downside. And one of most important reason why you should understand wave analysis is just to help you to prepare, for the next move that is to come. But if you don't understand elementary, we are not even talking of advanced concept, elementary concept of wave analysis, you will not be able to prepare for the next move that is to come. I sent this running flat corrective structure setup and this move that is to come to the group. Yes, I can show you proof for that. If you go to our Telegram page, you will see it there. Okay, can you see euro dollar at this point in time? We have spotted this impulse. We have A, B, and C. This is a running flat corrective structure. And why don't we think it will be expanding? All right, why don't we think? Why didn't we think it was going to be expanding? We couldn't have thought so, because at this point in time, if you combine timing with structure, it was already 2 p.m. and then the only volume available in the market was just to push this market, push price in the direction that it has to go. So at this point in time, this setup was sent to the group to prepare for the downside of euro dollar, and I believe you can see how it plays out brilliantly. Can you see? Can you see? It was a brilliant 1 to 8 risk to reward that I took here. 1 to 8 risk to reward. All right, can you see? It was a brilliant 1 to 8 risk to reward ratio that I took on this trade. That is the power of knowledge. When you understand wave structure, then you anticipate the next move that is to come. So for this week, what should we expect for euro dollar? Okay, now it has made a big push to the downside. You don't expect it to just reverse at this point in time. No, it doesn't work that way. It doesn't. Okay, it's just like if a car is running at 150 kilometers per hour and you suddenly apply brake on that car, you shouldn't expect that that car will stop all at a sudden. No, it doesn't work that way. Okay, so it will slow down gradually before it's able to stop finally and then turn to the opposite direction. So what you expect is that this market will make a corrective structure to the downside, one more break to the downside. Once it makes this break to the downside on this 4 hours time frame, then it will have taken this liquidity, then expect this move to the upside. All right, that's for euro dollar. If you understand how to trade this move to the upside, fantastic, you can take it, but it's going to be very sluggish. It's not going to be very fast. But this break to the downside will be very fast, but you just break this low and then make a move to the upside. Then the psychology behind the formation of this pattern right here, I've told you. Okay, if you apply a brake on a car that is moving at high speed, it doesn't stop all at a sudden and then turn immediately. No, it has to slow down gradually, reduce speed, slow down until it finally stops before it can reverse. That is the same principle, and that is the simplest way I can explain this concept to you. Just expect that euro dollar will correct to the upside just a little, break to the downside, and from here maybe around 1500, around 1500, you should expect a move to the upside. That is euro dollar, guys. Pound dollar. In pound dollar, the same thing is applicable to pound dollar. We should expect a corrective structure here. Expect a corrective structure, one more break to the downside, take this low, and then from here begin to now develop structure to the upside. Is that okay now? But if market resumes and instead of us to get corrective structure for one more break to the downside, if whatever happened, market make a push to the upside like that and it's making corrective structure here, all right, expect one more push to the upside, and from this level, okay, you see this liquidity sweep here, from this level you sell it to the downside. What the market has just formed here is a regular flat for this break of structure. Is that? Yes. For this break of structure, it forms a regular flat for more downside. If you decide to form other types of flat, it can make a push to the upside, then make another push, corrective structure, break this one, then this must come up here, expanding flat, and a move to the upside. You see, I'm telling you the pattern. It can also decide to make a push to the upside with a corrective structure. This one refuses to break the low, this one refuses to break the high. You have a what? A contracting flat for a move to the downside. Are you seeing it now? So that's just how you should be anticipating it. So you need to understand those corrective structure. All right, you go to www.ntfxtrading.com. You will see a course on market forecasting. I've taken time to prepare that course for you. All right, on market forecasting using wave analysis. You go through that course, you have a proper understanding of how to anticipate the next move in the market. All right, AUD USD. Okay, AUD USD is the same thing with other majors. All we are anticipating right here is a corrective structure. Take a corrective structure, one more break to the downside. After this corrective structure, you shouldn't miss this last move, this move to the downside. It's still in the direction of your trend, okay? But after this, you should expect a what? A bigger corrective structure to the upside. But do not miss a break to the downside after this corrective structure, okay? So, good. All right, good. It was a very nice setup that we took on gold. Right here, we have a running flat, just as you have with what? With euro dollar. You have a move here and you have move here. This corrective structure is over for this impulse. Okay, but anytime you have a structure like this and you are looking for a bullish market and you are having an impulse this way, and then the corrective structure come this way, A, B, and C. If this C has taken the level of this A, then this cannot be an impulse for what? For this move to the upside like this. No. This will now become a part of corrective structure. This will become A. This one that breaks the level will become B. This one is expected to come either stop here, or stop here. If it stop here and goes down, then it becomes a running flat. If you take this top here, it becomes an expanding flat for a move to the downside. Okay, that's exactly what we're expecting here for gold. So right here, we have taken this level. So all we want right now is to have a move to the upside, either to this level or to this level for a move to the downside. Is that okay now? So all you need to do right now is to wait for a small correction, break this level, and then look for this buy opportunity to the upside. I'm so certain, guys, that this buy opportunity on gold is going to come. But you are not just going to come to the market and slam buy on it. No. Allow this market to rest. It's falling sharply. Let it break this structure to the downside. After liquidity is available, then from here, now trade this buy to the upside, either to this level or to this level. From there, you sell, look for sell. Okay, I've earlier given this setup late in the week on Friday to my guys. Can you see the Telegram? You can see we have given the setup. Where is it? On gold, can you see? We have already given it that we are expecting gold to move to the upside, and I gave a valid explanation as to why gold must proceed to the upside. Okay, that is the power of wave analysis, guys. That's the power of wave analysis. Let's go back to the chart. Then don't miss this move to the upside. Okay, then next is USD CAD. Of course, we have been tracking USD CAD for quite some time now, and you can see that right here we kept on saying in all the outlook, I kept on saying that this level is a liquidity level. After this corrective structure right here, this move to the upside must come here and it must break this top. Do you remember that I have been telling you this from this level, that weekly must break this top because these are liquidity level in the market. They must be taken. I have been telling you, and most people will not still capitalize on all corrective structure on the lower time frame to buy USD CAD. I've been buying it, guys. I've been buying it because I know that the direction of the weekly is bullish. Okay, weekly will always go. In fact, it's not even only weekly. All time frame, they will always go to take the next liquidity. That's the same thing that is applicable to USD CAD. It's coming to grab this liquidity. So this must come, take this liquidity before any fall. All right. So and if you go to lower time frame, if you go to 4 hours time frame, you will see all the corrective structure. Since I've been mentioning this, you see all the corrective structure. You buy. At every corrective structure, you buy. Before you have corrective structure, you must have a break of structure. So you have break of structure here. Okay, corrective structure minimum of 3 waves, you buy. All right, break of structure minimum of 3 waves, you buy. Okay, break of structure minimum of 3 waves, you buy. Can you see? This is how you do it because you are trading in line with the higher time frame direction. Break of structure, 3 wave structure, expanding flat right here, you buy. This is how I've been eating well on USD CAD, guy. I've been eating dollar. Okay, I've been making it there. Break of structure, 3 wave structure right here, you buy. I'm still holding some position on USD CAD, but of course I've moved my stop to break even. Okay, so that's how to do it, guys. That's how to do it. That's how to do it, because you understand the direction of the higher time frame. That's where the biggest job lies, guys. Once you get that direction perfectly, all other things are easy. Okay, that's USD card, guys. USD JPY, of course, we have been following USD JPY. At a time, we wanted to abandon the buy opportunity, but haven't seen the structure in the weekly time frame. We have to continue. We have to continue. Corrective structure here, break of structure, corrective structure here. This must proceed to the upside. So if we know that weekly is to proceed to the upside, how do we view the structure on 4 hours time frame? How do we view the structure? Can you see? On every corrective structure, you buy. Okay, break of structure, corrective structure, you buy. Some people will say, why am I saying this is a corrective structure? If you have something like this, break of structure, if you have this one moves down very strongly, which is wave A, if you have a very small wave B and a very little wave C, this is a complete corrective structure. There's no rule that says that this one must be, this C must be the same length with this A. No. There's no rule that says that. So this C is expected to take the liquidity of A, and it has done so. So we can start looking for buy opportunity from here to the upside. That's exactly what you see here. A, B, and C. It's a complete structure to the upside. Break of structure. All right, corrective structure here, and then what do you see? Upside. Okay. So, and even when we resume trading next week, you should expect USD JPY to keep pushing to the upside. So what do you want to see at this point in time? You just had a break of structure here. So the next thing you should see is corrective structure. But right now we can go to 15 minutes and see the structure that it has created. You see it right here. All right, you see break of structure. After break of structure, what should you expect? Corrective structure. Can you see A, B, and C? If this C has gone here to take this level of A, this is where you should look for entry for USD JPY. But right now, with what it's doing, it could make something like this: A, B, and C. It could make something like this and then come down to take this level. From here, you can make a move to the upside. That is it for USD JPY, guys. For BTC, of course, we have said that BTC we keep pushing to the downside. From weekly time frame, we have given direction right from the top here, that BTC will keep pushing to the downside, and you can see that it has been pushing to the downside. Okay, so what should you expect? What should you expect on BTC this week? What should you expect? All I want to see is a corrective structure. If I see a corrective structure like this, I sell more. Okay, but without a corrective structure on the 4 hours time frame, I'm not going to take action on BTC, even though I know that it will still keep pushing to the downside. Okay, it will still keep pushing to the downside. Look at it. I expect that BTC should take this liquidity. All right, should take this liquidity. So if it comes, take this liquidity like this, from here you can be looking for buy opportunity to the upside around 45,000. So if you are holding if you are having a buy on BTC, just know that you have to be patient until you hit around 45,000. Okay, that is it for BTC. But on the lower time frame, what you expect, I've told you, you have to wait. It's been dropping without giving opportunity for entry. All right, so the best we can do right now is to wait for corrective structure. This size of corrective structure will be okay for this move to the downside. Okay, now that's for BTC, guys. Without corrective structure, don't attempt to even enter. All these ones that have been happening here, they are all impulses. Impulse. Where is the corrective structure? It's not there. And without corrective structure, you can't trade. You cannot trade. US tech, guys. US tech is falling, is due for corrective structure. It might give a bigger corrective structure because this A is already very strong. then corrective structure right here, and another break to the downside. So this size of corrective structure is okay for this move to the upside, and we pick it from here, and then we take a move to the upside. That is it, guys, about what I see as far as the major pairs are concerned. And I believe you have been making use of our past forecast, and just keep making use of it. We are correct most of the time, and even when we are wrong, we admit that we are wrong. And what is important is that when we are wrong and we admit we are wrong, we know the reason why we are wrong, and we know how to take measures in order not to repeat similar mistake in some other days. Are we okay now? So if you want to learn market forecasting using wave analysis, you go to www.ntfxtrading.com. You will see market forecasting using wave analysis. Just write your comments on the comment section. Let us know areas where you want us to do content that will help your trading career. And then also do well to subscribe to our channel if you have not done so. Share the link for other people to benefit from the free content we are sharing, and ensure that you click that notification bell so that whenever we send a video to YouTube, you'll be the first to be notified. All right, so have a lovely weekend, guys. Bye bye.